Welcome, everyone. It's Angelo Robles to the Angelo Robles podcast. As many of you know, at least now you do, I'm also the founder of Family Office TV and SFO, that stands for Single Family Office to our newer folk, continuity. And my founder status does not go away at Family Office Association. And this is probably the last time I'm going to mention it for those of you that have been part of my 4 videos that are building into launching Family Office TV. Many of you know for many a decade plus, I've been the founder and CEO. I'm still the founder, but I sold my remaining interest in Family Office Association, a wonderful group. I'm sure they're going to do a great job, and I wish them nothing but the best. But I'm excited about my future after a couple of months now of my selling, I guess you could say, FOA, and having a chance to travel and reflect and know what I want to do and what I want to build within the family office world. It's an exciting time. So on that note, today it is Adam Robinson on what I'm defining as Occam's razor in investing, life, and critical thinking. It is great to have Adam back on. He is an entrepreneur, a systems builder, an advisor to hedge funds, and U.S. Chess Federation Life Master. Adam, 15 months has been too long. It's great to see you.
Has indeed. Good to see you.
And again, we said it offline as you came on about 2 minutes ago. You catch me on a day when I don't have my black 10-gallon cowboy hat, my black Stetson. It would be great if we could be matching, but you got the I love the white hat, summer look. And
it's a top hat, sir.
Yes, the top hat indeed.
Of straw because it's summertime.
I might even be encouraged at a point of our interview to step up for 30 seconds. My Stetson is about 20 feet away, and I think maybe parts of the audience will get a kick out of it, and other parts will call me a whole bunch of names on YouTube, but that's okay. That means they're watching.
Yeah, I'll certainly get a kick out of it, so be sure to do that.
Well, I will not forget, and someone in the chat now is not going to make me forget too. On that note, I did promise we have a lot to talk about. I want to get right to it. Well, what a surprise. In 15 months, so much has changed. Or has it? Let's talk. Adam, define logic and rational investing.
Logic derives from the Greek word for logos, for word. And logic I don't think it's really changed that much, was developed by the Greeks. And, here, all cowboys wear Stetsons. Angelo wears a Stetson, therefore Angelo is cowboy. And logic, we've come to deify logic in our analysis of the world, in our in the way we navigate the world. And one of my favorite quotes is by G.K. Chesterton, who said, "Truth can be found by logic only after it has first been discovered without it." So logic doesn't get you to insights. Logic doesn't give you an edge because everyone has access to logic. I mean, logic is actually, when you think about it, very primitive. And very linear, one-dimensional, and life is multivariate and complex, and so logic is a primitive tool, and this is a theme I know we've discussed, Angelo. It's about the importance of using your unconscious mind and intuition, but more your unconscious mind to transcend logic. Logic really has limitations. And so what was the other question about logic, and what was the other one?
And the relationship, if there's any, define logic and rational investing.
Oh, okay, well, that's logic. Okay, so rational investing. Rational investing is done by maybe 6 people in the world. And what do I mean by that? Is that they have, the 2 I'm thinking of are Buffett and Munger. And I'm allowing for another few people in the world to in that category. But rational investing, as I define it, is one that proceeds on the basis of an understanding of the world and what it means to invest. So, for example, Buffett famously said, the first rule of investing, there are only two rules of investing. The first is never lose money. And the second is never forget rule number one. Now, that sounds very simple. It sounds like he's being kind of arch or clever, but he's not. It's actually one of the most profound things ever stated about investing. And because on first glance, we go, well, thanks a lot, Warren, for that tip. Don't lose money. But how do I make it? And he would say, I just told you how to make it. Don't lose it. And his core insight there is that if you, given the value of human enterprise, now he's talking about investing in companies. What do we know about the future? Do I know whether a Picasso 50 years from now is going to be worth more than a Picasso today? I don't know that. In fact, whenever you're talking about the future, you're talking about unknowns, things that are uncertain. So what can we know about the future? I don't know the value of what farmland will be 50 years from now, what Tesla will be worth next quarter even. But what do I know over time? And their key insight is that the value of human enterprise improves. Human beings, we don't always know what to do, but we get better and better at being able to do things. So the value of human enterprise necessarily grows over time. And so if you find the best enterprises, the best companies, the value of that must grow over time. And then you can layer that edge with other edges, like going after really great companies and wait until you get a decent price for those companies. And so that's their approach to investing. I know others in niche fields. I know, for example, I know a couple of young art investors who employ geographic arbitrage in the art world. They'll discover that in Southeast Asia, impressionists are, for whatever reason, in high demand, whereas in continental Europe, they're going after cubists, and they can arbitrage. So based on that one insight in niche fields, then you can, I think you can invest in many other things, of course. I guess what it comes down to, having said that, is that you need to know you have an edge when you invest. And if you don't, you're entering into the mixed martial arts ring with, bruisers who are going to take your money. And I know so many people who invest in crypto, but that's not investing. There's no rational framework for that. And so, by the way, I'm talking about crypto coins. I'm not talking about blockchain and other technologies. So I think you need to have an edge. And if you don't, entrust your money to people who do, in whatever small domain they have, right? Whether it's an art expert and I'm not saying don't invest in farmland. In fact, nothing you and I say is investing advice, right? But I'm just talking about a framework for approaching investing. And, one last thing is, who was it? Templeton, Sir John Templeton, the great investor, legendary investor. He said once, if you want to outperform the crowd in the market, you have to do something different. And so I would say, rational investing, you better be doing something different. Otherwise, you're going to get the same results as everyone else. So most investors in the world have been in the same business schools, read the same business books, same investing books, and they think somehow they're going to have an edge over everybody else. But they don't. They're all doing the same thing. So for sure, a rational investor, say you're a family office looking to entrust your money to this fund or this advisor or whatever, is ask the person what they do differently from everybody else. That'll stop them dead in their tracks. And except the ones that actually do something different. Like Angelo, you do things differently. I like to think I do.
That is for sure.
Yeah.
Back a little bit to logic, given your chess background, what, and we'll weave that in, what is the difference between logic and critical thinking?
I don't think there's any difference. So if we define logic as the application of deductive rules of reasoning, but there are other kinds of thinking, right? I would say all thinking comes under an umbrella of just thinking. What's creativity? Creative thinking. I mean, in a sense. And but I think one of the differences is that thinking, and I talked about this recently, is that I talked about the book with Shane Parrish, the origin of consciousness in the breakdown of the bicameral mind. And he asserts that consciousness, such as you and I right now are conscious. You are conscious, aren't you, Angelo?
I think so. I'm awake. Okay. I got coffee. Okay, and a little bottle of whiskey on the side, on top of it.
Good. Oh, good. Is relatively recent in human history, in human development. And he makes the persuasive case that it developed about 3,000 years ago. And so he says, I know that means that I'm asserting that the pyramids, for example, were built by human beings who were not conscious in the way that you and I are conscious. And so if you're not conscious, you're certainly not using logic or thinking or critical thinking or anything else that we would consider thinking. And yet it is a kind of reasoning about the world. Our bodies reason about the world. When a baseball fielder runs out and extends his arm to catch a fly ball, that's reasoning. There's a whole supercomputer going on. The calculus of the trajectory of the ball and where he needs to leap and extend his arm to catch the ball. That's reasoning. And so when there's all kinds of reasoning. So I'm not sure what critical thinking is. I guess that means to expose an idea or to some kind of attack, some kind of analysis. I'm not quite sure what critical thinking is.
When you're playing chess has a defined set of rules. You can't just do whatever you want. It's different than you interacting, talking with me in person. Anything is possible. Maybe I go crazy. But in chess, I'm going to have a limited, I have to follow the rules and guidelines of the pieces that I control. Now, there may be thousands of different variables, which is why inevitably computers are just simply better. That probably happened, about 20 years ago. Is a game like chess, which is defined by logic and critical thinking, how does that potentially transition to people that are good investors?
It doesn't at all. Chess, there's a lot of, there's several strands that are begging to be explored there. The first is chess is not a good paradigm for strategic thinking whatsoever, because both sides see all the pieces on the board. There's not going to be any surprises. It's not like, whoa, Adam just introduced a new piece onto the board. And so there are no surprises on the chessboard. The rules are known. The value of the pieces are known. And I know exactly what my opponent knows about the board. So I don't know what he's thinking, of course. And he may be pursuing a particularly devious combination that I overlooked that. But everything is evident. Whereas in life, pretty much the opposite.
Yes.
We don't even know what the pieces are, right? We don't like, whoa, what's going on here? And so we're trying to make decisions about the future, which again, by definition, is uncertain. And so I don't think that chess is an analog for the kind of thinking you need to do in investing is a fertile one. I don't think it's very good at all. And I'm not, the thing about games themselves, you made a really good point about the rules, right? And all games, you know, the reason you have people who can excel at chess or football or whatever it is the domain is very limited, right? And someone knows the rules and knows how their performance will be judged, and so they can work that to death and get really great at that. But life is a lot murkier, and investing is a lot murkier. There's so many variables. It's not clear how you can train in that sense to be you know, a great investor in the way that you could train to be great at doing backflips or telling jokes or whatever. So investing is tough, very, very difficult.
And I suppose a related question, how would you define, forget good, a great investor?
Well, these are all, you know, you keep, as you always do in your inimitable way, the theme here is what does it take to invest well? And again, I think it comes back to, you have to have an edge. Okay, you have to have an edge. You have to know what that edge is and not deviate from it. You know, Munger talks about circle of competence, like, and don't go outside that circle. If you're Michael Jordan, don't play baseball. Stay within basketball. And you know, kudos to him for trying, but you're one of the best basketball players of all time. Maybe stay within that, you know? And so the two young investor friends I have in the art world, that's all they do, and they do it really well. Steve Cohen does what he does well, you know. Everybody does everybody who succeeds focuses on what they do best. And so you need to have an edge. You need to know what that edge is and have the discipline to stay within it. That's really tough. You know, Munger said that most of what he and Warren did was wait for opportunities. And because they had very strict guidelines and they were ruthless, they are ruthless about sticking to those guidelines. Even when in any given opportunity, they would know pretty certainly, you know, this is outside what we do, but we could make a ton of money on this. They won't do it. And the other thing is to have a system. To have a system and metrics to evaluate your own success, right? Because if you don't, how are you going to get good? How do I know I'm a better investor today than I was yesterday without a system and metrics to evaluate how I'm doing? If I were to ask a doctor, say, are you a good doctor? I'm sure the doctor would say, yes, I am. Very proudly. I'd say, how do you know? Doctors don't have metrics like that. You know, most of my patients survive. Well, glad to hear that. But how do you know that you're good? You know, there's a great psychology piece. It's called Unskilled and Unaware of It. It's by Dunning and Kruger, the Dunning-Kruger effect, that if you're unskilled, you're unable to evaluate how good you are. So the great investors, I am sure if we were to ask Warren and Charlie, are you guys good investors? They'd say, well, we're getting better every day. Because they have such high standards and they know how to measure their improvement. Kurosawa, the film director, famous film director, in the 1980s, I think it was like 1984, 1985, one of the legends of the film world, received an honorary Oscar for a lifetime achievement, presented by his two biggest fans, Spielberg and Lucas. And he said through a translator, I don't believe I deserve this award. This is one of the greats. Like, he's like 85 something years old. He's saying, I don't believe I deserve this award. He's holding a little statuette. Yet I'm just getting the hang of directing. But I will use it I will accept it as an inspiration that I may one day merit it. And so the great investors, like the great artists and the great anything, are tortured. Like, I'm not yet there where I want to be. So they're always getting the hang of things.
Interesting.
And they measure their improvement.
For sure. Quantitative. Too much of it is done qualitatively. I'm glad you mentioned a word in Edge and investing a couple of times, because, does that segue well into my next question? What are some of the potential uses of, I guess, specifically generative AI in gaining an edge in investing?
None. All generative AI can do, what the generative AI does it's what all AI does really, is it looks over large bodies of data. It's really machine learning. They call it AI. It's machine learning. It's statistics. And they, not very sophisticated statistics, but it's machine learning. There's nothing intelligent about it, really. And so those large models, and really it's the fact that they're able to extend and look for patterns over previously, unheard of volumes of information, data, structured and unstructured data, is it just looks for patterns. So all it does is, for example, when it seems to be having a conversation with you, it knows that given the context of your question, the word most likely to follow the word the is whatever. Cat or tuba or president or whatever it is. And so it mimics human conversation because it's looked at, I don't know, terabytes and terabytes of data and distilled these rules. Which brings us back to logic. All it does is show you the conventional wisdom. Now, it's very clever at showing you the conventional wisdom, but it's not going to give you any insights. And I tested it. It is very clever. In other words, it's a better word than clever. It's very thorough. So if you asked it, here, I gave it this question, because I asked about investing, right? So I asked ChatGPT 4. I said, if China were to violate the sovereign territoriality of Taiwan, which U.S. publicly listed stocks would benefit and why? Which U.S. publicly listed stocks would be hurt and why? And I have to say, I was impressed with the list. It stumbled a couple times, and so, but. Think of it like this. It's like your own personal McKinsey. It's not going to give you any brilliant insights, but it'll go, oh, yeah. And when I looked over the recommendations, there were a couple of mistakes and a couple I went, oh, yeah, I would have forgotten that. So it's nice as a sort of a thought checker, right? They're grammar checkers. okay, let's call it a thought checker, but it's not going to give you any insights. And I I gave it some of my inspirations over the years. In other words, I gave it the data I had and said, what would you conclude? And it didn't come anywhere close to my insights. And I'm sure if you kick the tires on it, you'd find the same thing. So it's not going to give you any insights. And the thing is, because everybody uses it, you got no edge, right?
Huh.
So the only edge is in asking better questions.
Prompting, as they call it.
Right. So it's up to the user to ask better questions. But again, the way 99.9% of investors look at the world, it's all the same. Again, they went to the same business schools, they read the same books, they read the same articles every day, they listen to the journal, they're on their Bloomberg, and they're looking at the world the same way. So the questions they ask about that world are pretty similar. Not that they're identical. So yeah, the edge in the future, not just in investing, but with AI, is knowing how to ask better questions.
Then if I stick to how I asked my last question, I guess your answer in my next question is going to be an obvious, probably maybe a 2-letter answer, but I'm going to twist it a little bit. Will AI eventually disrupt the hedge fund industry?
Of course, it'll disrupt every industry. And, I've been thinking about that. So I'm going to have to weave in a few thoughts here. Moore's Law, what's that? Leaping over there to Moore's Law. Moore's Law was discovered. Well, I'm blanking on his first name. Moore.
Gordon?
What's that?
Gordon?
Yeah, that's it. And one of the founders of Fairchild Semiconductor, and which became Intel. And with Moore's Law, they realized that where chip prices would be, Moore's Law, for those who I'm sure everybody knows, that the speed of processing speed will double, and the size and cost will drop in half of chips every 18 months-ish. And so they said, since we know where the hockey puck will be in 18 months, and in fact, we leap ahead in 3 years, let's just drop the prices today. And because they knew where it would be. And so they had an edge over all the other chip makers. The other chip makers thought they were nuts. Like, what? How could you're going to lose tons of money? But they knew that that's where the prices were going to be. And so what's the relevance to that with AI? Is that when AI, say, another version or two, and I have actually, I should point this out right now in a second, about what people don't know about AI. So right after I finish this thought, ask me that one. What don't people know about AI? Is that essentially the world all the major hedge funds will have their own massive AI engines, knowing where things are going to be. And you've got these, imagine the arbitrage going on with these AI engines that are not emotional, that you can't scare, you can't bluff, you can't anything. And I think that prices will be very quiescent. It's not going to be what's the movement about, because it'll be different AI engines on the buy and sell side of everything. And I don't know that prices will trend in the way that they do now. And one corollary to that, on previous conversations we've had, I stated that a trend is only the spread of an idea. That's all a trend is. It's the spread of an idea. And let's say the price of a stock has been going down, and all of a sudden I get the notion, you know what? Things are going to turn around. And all of a sudden the stock bottoms. And then a few other investors go, oh, look at that. You know what? That stock's looking pretty good. And it starts to go higher. And then the idea spreads in the efficient market hypothesis about markets that they can't account. That theory does not account for price trends, because what they view as information is instantly disseminated. And that of course is a fiction. But even if information is disseminated instantly, everybody in the world knows all pieces of information. The ideas take a while to spread, to be embraced. And I asked you to remind me, but I'm remembering, what doesn't the public know about AI?
Yes.
So about 6 years ago, I was at a gathering, and I happened to be talking to an AI expert with ultra high level, sophisticated. When I said ultra high security clearance, like Pentagon level kind of security clearance. And I was raving about Google's DeepMind at the time, right? Because they had AlphaZero chess they had developed, and AlphaZero Go, which leapfrogged human beings, and I was raving about it, and he was listening very politely. He said, Adam, there are government research labs that are 5 years ahead of what Google is bragging about right now. 5 years. Think about that. If you were 6 months ahead of Google, that would be big. He said 5 years. He said, what Google is bragging about is sitting on a shelf. They don't even think about it. They've moved way beyond it. And so when we, and by the way, I asked him, so which government lab? And it surprised me, the answer, the Jet Propulsion Lab, rocket scientists. And not just about, they're scientists not just about rockets, but they had the biggest supercomputers in the 90s. So they were way ahead of everybody else in developing models and iterating on AI, and which again is really just machine learning. But they were the best. They are the best. And so when we look at say ChatGPT and other announcements, wow, look at this. You can be sure government labs are ahead of that. And I asked, where is China in this race? And this is
to my next question.
Yeah, in 2017. And he said they're 3 years behind us, but catching quickly. And China's big advantage, of course, is their data, their pooled data. In the United States, the reason large language models work so well is they're large. And the more data you can throw at a model, the smarter that model becomes. And so in the US, companies own a lot of data, like Google has its data, and Amazon has its, and Apple's, and so on. So the data is siloed. Well, imagine a country where it's not siloed, where they have all the data together. Imagine you throw, these large-scale models against completely open data. That's a pretty big edge. So, I think the US has to rethink antitrust. I think in this regard, in other words, relax it. I think US companies have to think about cooperating. By the way, it sounds like I'm saying US versus China. I don't, I'm not trying to foment it. It's us against China. But in a sense it is. And the thing about AI, but let me finish that other thought, is that US companies should think about cooperating with the sharing of their data. And it's a great book, Co-optition, written, I think about 20 odd years ago. It's a conflation of the words competition and cooperation. You can be competitors in many respects, but you can also cooperate, and at the same time. And so yeah, these are it's a high stakes race, you know, and OpenAI, one last thing, OpenAI was started by Elon Musk and a bunch of his posse, I think Reid Hoffman and Sam Altman and those guys. And the vision was that AI, once it gets to really super intelligence, is going to be too important for any one company or country to own. So we gotta make it open AI. It has to be a global commons, as it were. And he later left. We had a disagreement with Altman about this or that, and OpenAI, you know, despite the name, isn't as open, really. Yeah, Microsoft has a big edge in there, and you know, Godspeed, go for it. But it's not really open. It's not the original vision of a truly open AI.
And what kind of resources do iconic quant funds, Renaissance, Jim Simons, maybe even Ken Griffin, like, do they have resources that could rival a government?
Well, so they don't have the supercomputers, and they don't have the although I guess with, you know, Amazon AWS, right, web services, you could access some pretty strong computers, but it's again the data. It's the data, and I think that the JPL, the Jet Propulsion Lab, I think their edge was also in developing models we don't know about. But remember, it's unlike the U.S. government is going to start trading derivatives. So I think Renaissance and Ken are they're pretty safe for now. But there's for sure a Manhattan Project level panic at all the top hedge funds, right? Bloomberg's coming out with Bloomberg GPT, and you know, but of course, by definition, that's not going to give you an edge because anyone who can buy a Bloomberg terminal has it. Yeah, there's a mad race to who can get to the biggest supercomputer first, and it'll outcompete all the other financial firms.
Adam, how do we know big change of direction? How do we know what information that the Federal Reserve publishes is actually useful and what is not? And maybe a part two, they have what, hundreds of really smart people, economists and others on board. And I don't know, they seem to miss the mark quite a bit.
Well, so yes, they do. Well, to riff again on a theme you've already established, is that you need an edge, and the statistics are publicly available to everybody, right? With Reg 2000, right, it said all information about public companies has to be public. The government publishes their information to everybody. The Fed looks at, not just the Fed, but economists everywhere. They use, you know, thousands of variables and these really complex models, which is antithetical to the title of this conversation, Occam's razor. And you know, the way to think about it is this, you know, because economists are notoriously awful at predicting anything economic.
That's for sure.
Right? A friend, economics was invented to make astrologers look good, and so they look at thousands of variables and they can't predict next quarter's interest rates. What? It's like a meteorologist who can't predict whether it's going to rain tomorrow or not. Really, it's kind of simple. Okay, just the interest rates. You can leave everything else aside. Don't worry about inflation. Just tell us what the interest rates will be next day. And so, and again, all the economists, same thing as investors, they all went to the same graduate schools, study the same economic theories. I'm sure their models are not too dissimilar. And even when you deploy machine learning on those data sets, whatever model you come up with is not going to be too dissimilar from every other economist who's deployed machine learning about all the available statistics. But if you think about it, all investing is actually done at the end of the day by a human being. And human beings, we are pretty simple creatures. And the stories, the narratives we form about the world can be expressed to a 6-year-old. Really, very simple. And we can get complicated about it, and the explanations and everything about that. But at the end of the day, it's binary. I'm going to buy or sell. And my vision of tomorrow, again, it's a picture I have, an unfolding narrative into the future. And that's always very simple. And the problem with these complicated models is they lose sight of that. And so, yeah, human beings are very simple creatures. The stories we tell ourselves about the world are very simple. And because we don't have the bandwidth of supercomputers, and we can layer in lots of logic and analysis on top of that to justify a picture of the world we formed pretty quickly. So, yeah. Sorry, I hope that answered the question.
Since I have about 1,000, yes.
Okay, good. Okay, good.
I tend to be more machine gun fire style than probably dig super deep into, say, 4 or 5, although maybe in the future that's a good idea. What would cause the dollar to lose its reserve currency status?
Well, people have been talking about that for a long time, and a thought experiment that you, the listener, should engage in from time to time in investing is if everything goes to hell, right? Where are you going to stick your money, right? If we don't trust anything in the world, what are you going to do? Where are you going to put your money? And still today, the dollar, right? And if you run a thought experiment, the early acolytes of crypto were, this is going to replace fiat currencies. Well, just do a thought experiment. If the stock market were to drop 50% tomorrow, do you think everyone's going to go, oh my God, I got to stick my money in crypto? They go, oh no. I'll tell you what they would do. They'd go, oh my gosh, I better buy bonds, government, US treasuries, right? And so, or gold. And so a useful thought experiment is to run through these scenarios again, this sort of, and you'll see that what's going to be hobbled together, right? They're talking about some kind of multi-nation new currency. If you look at the lack of transparency and what's going on in China, I don't think anyone's going to go, oh yeah, their currency, that's going to be the new reserve currency. I don't think so. And so the dollar is still the front runner. And for all its problems, I remember when I was a teenager at Wharton, they were talking about gold going to $50,000, right? This is when I was a teenager. Look at all the money the US government is printing, and gold has to go up, and the dollar is going to drop down to nothing. But the dollar, it's always relative to other currencies, right? And so, yeah, sure, we've been busy printing money, so have they. And so it's a relative game. And so I don't see that changing anytime soon.
If you look back in history, maybe it's coincidence, but doesn't the world reserve currency status belong to the country with the most powerful military? A guest I had on a couple of days ago was even more specific and said the world's most powerful navy.
Sure. Well, that's when you needed navies to extend power. But now let's say wars were fought over the internet.
Aha, you got it.
Right. And you'd say, okay, those with the most powerful hackers, so I get that, right? Because at the end of the day, all laws, after all, a currency is just a promise, right? And at the end of the day, backed by legal sanctions and stuff, and so all laws at the end of the day are backed by force.
I was just going to say that.
By
The
the
threat
threat
of
of force.
violence and the capacity to actually do the violence.
Right, exactly right. Even a law that says speed limit here is it's a residential neighborhood, it's 25 miles an hour. That's backed by the threat of violence. Now, we don't think about it, but try going faster. A cop car is going to come up, and if you continue to drive fast, they're going to make you stop. Anyway, they have to. And so all laws are backed, yes, by the threat of violence and sanctioned violence.
Of course, it's by the government.
Yeah. So but the reason I don't. You're always such a great thinker of different possibilities, and I always love going down these rabbit holes with you, and some of them. Just by nature, because I won't be able to operate day to day if I'm like wondering what happens. I don't think Buffett and Munger are thinking too much about the dollar loses its reserve status, because if that happens, all other bets are like, whoa, what else is going on in the world, right? And so, right, for that to happen, lots of other things are going on. That won't be an isolated event, right? And
that is true.
Right. And not likely, for sure, there will be precursors to it. So there are no black swans in the world, just none. They're black swans to the market, to the crowd, but somebody always knows something. Like, I'm going to invade this country, or I'm going to declare peace, or I've just discovered this. Or I know that CEO is going to resign, or whatever it is. Somebody knows something, and they begin to place bets on that knowledge. And so when it comes down to the time when a reserve currency, the people who are organizing that, for example, when Nixon went off the gold standard, what was that, 1974, right?
71, I think.
So 70. Okay, there you go. Even without your Stetson, you're still sharp. Okay. Right. Yeah. Oh, right. 74, I think, is when he resigned.
Yeah, exactly.
Yeah. I knew 74 was significant for Nixon. Anyway, so yeah, 71. So we go off the gold standard. I am sure some key investors in the world knew that was going to happen. And I'm sure they profited very well because of it. And so if there is actually underway, or has been underway, a serious effort to launch a new reserve currency, we'll see some evidence somewhere. It won't come out of the blue. We'll see evidence a week or two or three ahead. Something strange is going on in currency markets. It's not going to come out of the blue.
That sounds logical. To our live audience, and well, if you're watching it in a recording, you'll know by the length, I do tend to skew to doing long form interviews. Adam is perhaps my favorite. Why did I say perhaps? Well, let's stick with the word perhaps. So I leave my options open, Adam.
Okay, I can aspire one day.
Among my favorite guests, I'm incredibly curious. I ask a lot of questions, and he's always probably overly generous with his time. My back is probably
perhaps anyway. Perhaps
when I put my hat on, which will happen soon, I will regain energy. But in case you're wondering if you're live, we probably still got a pretty long way to go. And you're probably wondering, where are Angelo's crazy questions? You're probably not going to hear as many of them today with Adam, but I promise there'll have to be one or two. Maybe aliens, we'll see. Gold, oil, copper. Are they hedges against inflation?
Gold is not. Okay, so what is inflation? When prices rise, and so this is multi-layered here. We use the word inflation as a sort of rising tide that lifts all boats, right? And gold is not a hedge any more than wheat is. If there's inflation, they're both going up. Now, they're not going up necessarily at the same amount because there are other factors influencing that. Wheat, and whatever the harvest was this year or whatever. So the problem with gold is that you have to store it, right? Gold, here's the way to think about gold. You mentioned copper. Gold is shiny copper that you have to store. That's what gold is. It's shiny copper that you got to stick in a vault, which means that you have storage costs, right? You have storage costs. And so those storage costs it's the cost of owning the gold. Plus, there's the opportunity cost, right? So I'll give you an example of something that rises really fast, food prices, because when food goes up, do a thought experiment. If the price of wheat were to double tomorrow, what would happen to demand? It'd skyrocket. Every family would be out there buying bread. They'd go, oh my gosh. Inflation with necessities, it's the opposite of what classical economics dictates. The price goes up, people are going to panic and go, I need food, I need water. When those prices go up, demand goes up because I can't anticipate, well, if it went up, it doubled in one day. What's going to happen tomorrow?
Yeah.
It'll go exponential. But people don't need gold, right? They don't need the gold. By the way, gold is very, very useful, but not as a hedge against inflation. And so one way to think about it also is let's distinguish between things we need and things we don't really need. So if in the world what do human beings need? We need food, right? We have to eat. The world as it exists today needs a certain amount of energy to run. But we don't need copper. We can stop building for a while, right? So I would distinguish between food, which human beings need, energy, which the existing world needs, and the inflation of stuff like copper or things you build with and make things with. That we could cut back on, right? And so we could cut back on the building, but we still need to heat our homes. We still need to eat. And so now gold, again, has storage costs and opportunity costs, because if gold goes up, I'm not going to want more of it. I mean, as an investor, I might see a trend going on, but with food, if food prices go up, I'll buy today because who knows what's going to happen tomorrow, and I need the food. And we saw a lot of that skyrocketing when Russia invaded Ukraine, right?
Yes.
Oil shot up, wheat shot up. There's all kinds of fears around food, and so yeah. So gold isn't a hedge of inflation. It would be better to, for example, a hedge against inflation would be buying. This isn't investment advice. Would be buying shares of food companies, because they will pass on the cost of the food increases to the consumer who's got to eat. And so those shares will go up. That's a hedge against food inflation, food stocks. So you have to a hedge against inflation, you have to distinguish what kind of inflation we're talking about here.
If what you said, which sounds very logical, then, and I don't know if I'm being tongue in cheek or getting myself in trouble, is that a good thing for those that own farms?
Yes. In the same way that, you know, Warren and Charlie, I've said this before, I think with you, that people think of Buffett and Munger as investors who happen to philosophize, but they're actually philosophers who happen to invest, right? They're investing, the way they invest is an extension of, it's a derivation of their philosophy and their understanding of the world. And so they know that over time, human enterprise is going to increase in value. So I know that human beings will continue to need to eat, right? Now, farmland, you know, farmland is interesting. First, demographically, the global population is, for developed nations, already shrinking, and developing nations is going to go net negative, I think, by 2040, 2050, the entire global population will be shrinking. And already Europe is shrinking, the US is shrinking, but for, you know, immigrants. And so very few regions in the world are still growing. So even though people need to eat, there's going to be fewer people. I could see advancements in hydroponics, for example. Heck, maybe we'll start growing plants in space, or who knows where farmland won't be as valuable. Like that, I don't know. I know people still need to eat, but the advances in food technology, and there are many people working on that, trying to increase, you know, yields and things. So, but yeah, people will always need to eat. That's for sure. Where we get those calories and nutrients from, I don't know.
I could go in a lot of different directions with that. For now, I will be quiet. For now, no guarantees though.
Okay.
3 interest rate scenarios. Obviously, I guess there's only 3: raise, pause, or cut. What do you think will likely happen? The Fed's decision.
Well, so here's the thing. If you look at what are oil prices at right now, I mean, I've been a few days since I've looked at them, but they're at multi-month lows, maybe like 1-year lows. They're pretty darn low, oil, and headed lower. So are commodities broadly, right? Gold is at multi-month lows, copper. So they're at multi-month lows. The specter of inflation that everyone panicked over on Feb 24th, when Putin invaded Ukraine, has largely dissipated. And the fact remains that we're in a low to no growth world, right? And the deflationary forces are demographics and technology. And also consumption. You know, people, you know, family formation has collapsed in developed countries, and people's need for things, consumption, has declined sharply. And so there's not that kind of inflationary pressure. And so with prices declining, you've got improving technology, which is, you know, relentless as a deflationary force, productivity and such. Imagine what's going to happen to all the workers, all knowledge workers, and you and I have talked about this before, all knowledge workers, history, like gone, lawyers gone, accountants gone, like all that'll be replaced by a chatbot pretty soon. So if you deal in the world of ideas, you're toast. Your job's going to be replaced by an algorithm who's a lot more reliable, faster, and efficient, and cheaper than you are. So imagine what's going to happen to wage rates. And so we've got these deflationary forces. So I say that because the Fed, one of the rationales for raising rates was deal with the potential of inflation. Back in, hold on, December 15th, 2015, Yellen raised interest rates for the first time in a decade, like stupidly, moronically, because inflation expectations were at multi-year lows and declining. So she decided right then, good time to raise interest rates. And it promptly, instead of the 10-year yield rising, it sank by the next July into July 2016 to, record lows. And so remember the Fed can only influences the front end of the curve, right? The short-term rates. It doesn't affect long-term rates. And so here's the thing. I've seen the Fed do really stupid things in the past, and there's always the potential they'll do stupid things in the future. And so it's hard to game what they'll do. They shouldn't raise rates, right? Right now, inflation is going the other way. And by raising the short-term rates, when the 10-year yields, you got the 2-year yields higher than the 10-year yields. Well, that's not good. It doesn't necessarily lead to a recession. And in fact, I checked the 2 exceeding the 10-year. I look back about 75 years, and it's not predictive for about a year, like what's going to happen to the stock market, which is all I was looking at. But anyway, it's certainly not good for the economy for 2-year yields to be above 10-year yields.
No, of course not.
Right. So they shouldn't raise rates. That doesn't mean they won't.
In talking a little bit about, I guess, the GDP and more so inflation from a couple of minutes ago, one of my crazy questions, and I'm not quite sure it's really a question, and maybe a little bit of a mini rant, but I would love your comment on. And just somewhat off the top of my head, the populations are declining, specifically in the West. Younger
developed nations, Japan is also.
Yeah, that's them, and I think maybe South
Australia.
Korea are probably the most extreme.
Yeah, and Australia.
So the West plus others.
Well, I hate this term, but developed nations are shrinking.
Yes, that would probably be broadly more accurate.
Yeah.
Younger people don't appear to have much of an interest in getting married, or as much of an interest as past generations in having children. I have to wonder, what are some of the reasons for that? And I would broadly state, well, I mean, we could say a couple of different things. I'm trying to be very careful with what I'm going to say. More people in the workplace, from women, of course, men as well, but this creates maybe less of an interest broadly in quote unquote traditional families and having kids. And I think it would be fair to bring up a little bit of the taboo word. Are people as religious as they used to be?
Wait, slow down.
Yes.
It's like a 5.
I told you it was going to be a rant.
No, but it's a rant. It's a 5-part rant. So give me.
Okay.
So let me go about family formation. So all human institutions, anything a human being creates or human society creates is an answer to one or more questions. So this cup is an answer to a question: how can I get liquid reliably into my mouth? This cup is an answer. I could have probably jury-rigged a tube or something, and there are other ways to get liquid into my mouth. I could stick my mouth under the faucet. I could take the bottle and just chug it, but this is what I choose for now. This Zoom is an answer to a question: how can Angela and Adam speak and share their conversation with others? This Zoom is an answer to that question. So again, everything human is created is an answer to one or more questions. So is marriage. So is having children. It's an answer to one or more questions. And so now the problem, again, there are multiple factors here. One factor is in developed countries is the amount of debt that young people are burdened with right now. That's a big problem. The other is more metaphysical. And what do I mean by that? To have a family, you had to have a pretty good idea what the future would be like, right? You have to be able to plan. You have to know what tomorrow, but not just tomorrow, you have to have a pretty good idea what the next 10 or 20 years are going to be like. And in the 50s, until recent times, 10 or 20 years from now is going to be kind of like what today is, right? And so everyone was following a script that their parents and their grandparents followed, pretty much. And so the ability to, because you can't have a family unless you can envision having a family, which means you can envision the circumstances of supporting the family and everything else. And look at the world now. It's very hard to visualize what's going to happen 3 years from now, much less 20. And so I think that problem is metaphysical, and that's not going away. An inability to have, and by the way, if you think you have a clear idea of what's going to happen 20 years from now, you're deluded or benighted. You're like, oh no, you shouldn't have a clear idea. And so the drop in birth rate, for those who don't know, more people die in the US than are born. Like it's not the growth rate is slowing, we're shrinking. And that's true in Europe, it's true in Canada, Australia, Japan, Korea, South Korea. Very big problem in the world, because we've built up a world predicated on continual growth. You know, you and I talked about this
in our last podcast,
but
why the world doesn't
been
work
a theme
anymore.
of ours going back, 7 or 8 years. Musk has recently gotten on this bandwagon, like, oh my gosh, we got a big demographic problem right now. And because this entire world was built up, including the debt underneath it, was built upon a belief that we were going to keep growing, more mouths to feed. And that's changed. By the way, look at how we can trace that simple idea that young people today are having fewer families. Let's see where the real estate hockey puck is going to be in 15 years, because the baby boomers who are beginning to retire are downsizing. And in the past, the script was always, the kids move out of the home, they begin to have kids, and time to downsize, sell our home to the next generation, but they're not interested in buying right now. People are talking about the looming commercial nightmare, right? Office, this is a huge mess. Globally, commercial real estate is if they mark that to market today, be a financial panic. Plus the pension crisis, but there's also residential homes. Young people they're not getting married. You're not getting married, you don't really need to buy a home. You don't need to buy a lot of things. A lot of big ticket items you don't need to buy if you're not having a home and getting married and having kids. And I don't think people have really thought through where this is going.
And a little bit of my part too, that's the one that could be a little edgy, is the US was founded on very strong beliefs, probably looking back to the Viking days and inevitably through the Scots, of a very strong religious, quote unquote, character. And I know we're going down a road that could be very sensitive for people, but I think it's fair to bring up. It's fair to bring up. Broadly speaking, I have no quantitative proof. We do not appear to be as religious in this generation as we were prior?
Okay.
And is that impactful on family, on,
Okay.
on effectively everything?
Okay, so let's get precise about our terms, right? And so there is proof that there's data we could point to show that people are, I'm going to use air quotes, less religious today than they were, because there's church attendance is way down, right? There are metrics we could point to, and that's true not just in the US, it's true many other places. And so of course, that's just one indicator of being religious is going to on a formal basis to a church or synagogue, that kind of thing. Also, those are often family activities, right? That you go with your family.
Mm-hmm.
Your families, I guess that's going to be a factor there. And so it's interesting, you know, because as the world gets murkier and the lack of a solid ground underneath our feet of anything, what we can depend on, you would think that there would be more turning to religion. I forget who said, in foxholes, there are no atheists. And, you know, as the world gets scary, you would think people would be turning to religion. I'm not sure what people are turning to now. And that's worth an investigation. And so I agree with you that is the case, however defined. And now I am going to be kind of snarky, spirituality, whatever that is. That's not something you turn to when you're faced with life's greatest challenges, or, you know, so what do people turn to right now for guidance and for guidance, I guess. And it's in modern times, so much nihilism and cynicism and lack of faith in things, and so yeah, that's a big problem. But so you stated that as a premise, and I'm agreeing with you. So what's the therefore what? What's the follow on to that?
I think you could make the strong argument that there's certain moral character points about being religious relative to, quote unquote, in, you know, how I grew up, the 10 Commandments. Mm-hmm. Is that what keeps the purpose behind a family unit, quote unquote, together, and the belief in marriage, in commitment, in children, in being impactful for the future? And are there, I don't want to say, are there forces at work that are looking to challenge, quote unquote, the West relative to weakening everything related to a family unit, including religion? So there are a bunch of things there we should talk about. One is there's a breakdown in social cohesion across the board, which is really terrifying. And the society, social civility, social rules, conventions, the way what we as a society. So I'm moving away a little bit from religion just for a sec. Mm-hmm. Layer in, and the word morality is fraught with all kinds of connotations and stuff, and viewing it more agnostically and more less emotionally charged in terms of what rules do we, even ethics is kind of charged, but as a society, what kind of behaviors do we tolerate and don't tolerate? And for me, one of the really frightening in its speed is the kind of behaviors that are tolerated today in major US urban
cities usually. It's usually not small towns where everybody knows each other. Big cities, what you see on the streets of San Francisco, or what goes on that's tolerated really in pretty much every major city would not have been tolerated 20, 30 years ago.
Exactly.
It would not have been tolerated. It would have been unacceptable. And now it seems like everything's acceptable. And that erosion is a really slippery slope. The late, great, one of the last great philosopher politicians, Daniel Moynihan, had his broken window theory of social decay, where he said,
I remember New York.
Right? You got a neighborhood, and there's a factory, and the factory closes, and all of a sudden there's one broken window in the factory. It's not repaired. And people notice, oh, no one's taking care of the factory. And then there's two broken windows, and then there's lots, and then that, I don't want to say it's anarchy, but it spreads. And so at a certain point, as a country, as a world, we need to stick our heels in and say no more. It's just no. And we're not going to accept that kind of behavior in public. And I always respect people's beliefs so long as they don't force them on me or others. And I am sympathetic. For example, in Sweden, someone applied for and was allowed the opportunity to burn a Quran. Like, I
remember. Yeah.
Well, that's just recently. Why would you do that? Why would you publicly, and then we have to rethink things like free speech. I am a libertarian, fiercely and ferociously and proudly. I don't mean doctrinaire libertarian, but I'm just, please don't put rules on me. And I don't think you should put many rules on other people. But why you would do something that would necessarily inflame people and ask them, you just got to take it, I grew up outside of Chicago in Evanston, Illinois, and the neighboring suburb was Skokie, and it was heavily Jewish, and some Nazis applied for and got permission to do a march in Skokie. And again, it's and there are, why do I say all this? Because there seems to be a flaunting of public behaviors that the people doing the flaunting know are going to upset others. They know it. And I think we have to be really careful about what this is going to unleash. Really disturbing.
One word, yes. Moving on. Are the big tech companies, Amazon, Meta, Alphabet, using US government banking terminology, are they too big to fail?
Excellent segue, by the way. So are they too big to fail? What do you mean?
Well, they're probably not going to fail. Well, every company eventually fails. This may take a couple of 100 years. So I probably don't mean that literally, but from a figurative perspective, using America, are those companies so valuable that if something were to happen where they were to spiral downwards?
Okay, so here's the thing. The difference with banking is that banks take risks with their customer deposits.
Apparently, we've learned that this year.
My bad. I misspoke. Senior management at banks takes risks with their deposits because they get nice bonuses or, their stock options, whatever. So they take risks that, there was that, I'm forgetting the name. Doggone it. Anyway, they're incentivized to take risks because they know at the end of the day, the US government will bail them out because we can't let because the losses are borne by the taxpayers, right? And I guess somewhat the shareholders, but that was the risk they took in backing the execs at those banks. Anyway, so let's say Amazon were to go under. It would be because one or more other companies was doing what Amazon does better, faster, cheaper, more reliably, and in the nature of what was it, Schumpeter, whatever, creative destruction, right, of capitalism, right? And so that's, people are going to find better ways to do things, and if you don't, you're going to go out of business because other people are. And so, but I don't think any company is too big right now to let go under, because if it did, it would be replaced by other companies, right? So is there, am I misinterpreting the question, or is there something
No,
else?
it was an open-ended question, depending on your perspective of it. That's fine. Why is moderate inflation considered part of a normal, healthy economy?
Well, Milton Friedman did a lot of work on this, right? Milton Friedman said, eliminate the Fed and let the money supply grow at 2% a year. I seem to remember, it's been many years since my old Wharton days. It's the last time I read him, and I probably should revisit a lot of those books because I'm a little bit older now, and might gain new insights. And so he said, just let the money supply grow at 2% a year. So I remember his having a logic to that, right? Why don't you just let the money, just keep it stable and let everyone work around the money supply? That may have been for long-term, the population growing. I'm not sure what the logic was. I don't recall now. It's been a couple of decades since I read that, but I remember, and he spent a lifetime, thinking about that. And so, I assume that there was some logic. It may have been to keep up with the population growth. I'm not sure. Maybe that was the rationale. I don't know. But you certainly don't want deflation. And inflation beyond that 2%, which I think he sort of, again, built in, like, that's just the growth rate of the US population. It's not now. In fact, it's gone negative.
Yeah, for
So
sure.
maybe now he'd say, time to start shrinking the money supply. I don't know what he would say today. So I'm not really qualified to answer that question, but I would refer people to Friedman.
Given your libertarian views, I would assume that you're not the greatest advocate of upcoming, one day, central bank digital currencies, and assuming that it's not programmable money. But come on, of course, inevitably, maybe not initially, but they're going to want to do it as programmable money, where they're controlling your capacity to spend, interest rates, and what you spend it on, and zero privacy. That totally goes out the window.
Right.
I just don't know if there's any way around that.
Well, again, I always try to be precise in my thinking, especially the terms that I use. So remember, it's not, I'm using air quotes again, it's not government that's doing it. It's elected representatives. Human beings are deciding to do this. And human beings are making use of the information, right? And so it's, when we say the government is doing that, it sounds okay because it's an abstraction. But a bunch of people are doing it, and they're necessarily, because they're human beings, doing it with human beings are fallible. And one of the beauties of a market economy, and there are many challenges with a market economy, but with companies competing, is that the competition instills certain rigors in the way you do things. And and you have people, you're accountable to people. Politicians can do things, and they're out of office in 4 years.
Yeah.
And so with no accountability, and so I'm concerned. By the way, I said you could say I have libertarian views. I'm not a libertarian any more than I'm an anything. I'm not a Democrat or a Republican or a vegetarian or an anything. I'm just, so I have certain views, and so, but one of my foremost tenets is that freedom should be maximized to the extent it doesn't impinge on the freedom of others. And so I guess that's kind of libertarian. So I don't know what's to be done about it. And the thing is, Angelo, you ask so many thought-provoking questions. It really gets me to thinking about things I hadn't thought, considered. But at the end of the day, whether they are or are not going to do that is not going to affect my investment recommendations to my clients, or, I don't know that it's going to change my investment posture. I don't know that I'm going to be doing anything differently one way or another. So when the answer to that becomes more clear, and again, there will be harbingers. It's not going to be a black swan. Some countries going to implement, I think some South American countries with really high inflation rates have experimented with digital currencies to they're having trouble with it now. But they use Bitcoin. That when the price,
like El Salvador, but that's
yeah. And there are a few around that, and so I don't know. It's yes, it's going to impact privacy and everything. Yeah, but I don't. Right now, today in 2023, I don't know how to position around that yet. Or so when it becomes more clear or what that'll entail, and then I might have to change my investment posture or anything else.
Adam, I promised it is not in my notes. You think I could go multiple podcasts without even bringing it up? And maybe just to needle you a little bit, I think I have to, based on your last
needle
response.
Away. Go for
I have to. Is Bitcoin the potential to be truly decentralized and allow us to have a system that is digital, but is truly, if it is, decentralized, and not worry about it being programmable money?
I don't know. I just don't know. And I mean, you can needle me all you want. I don't. I like to be needled. I don't know. I don't know. It's so outside my circle of competence, and I tend to be more a skeptic. I'm probably more with Buffett and Munger on that. It's Napoleon once said, any order that can be misunderstood will be misunderstood. I'll give you Adam's corollary to that. Any technology that can be misused is going to be misused.
To give the audience a little bit of context, I had Adam on about 2.5 years ago, and I believe the verbiage he used, I could be a little off, Adam, was a very, very, very smart person. And I threw off names of iconic investors. Adam laughed and said, way smarter, mentioned that there was effectively a fatal flaw.
A flaw. Oh, yeah.
Yes. Has anything evolved in the last 2.5 years to either bring that to light or make that person, if you follow it up, maybe change their mind?
No. I don't think he's changed his mind. It's fundamental. It's not like, oh, by the way, you'll see what happened to Bitcoin price since that conversation, right? And it's down over 50% from where.
Well, that was probably towards a high. You can make the argument that the floors have gotten higher over the years, but I kind of promised I wouldn't make it a Bitcoin conversation for a variety of reasons.
So I don't, these are outside my I have no edge in that space. and I stay within my circle of competence. So I don't know enough to opine.
I have maybe one of my crazy questions. You could, and it's very vague, so you could answer it however you perceive the question to be.
Yeah.
How do you identify the answers that are often in this world hiding in plain sight?
So once again, very profound question. So one of the hardest things to see is what is obvious, because we see it and we dismiss it. It's obviously true. And here's an atomism, atom maxim is whatever is obviously true should obviously be investigated. And because we go, well, that's obviously true. We don't have to think about that. And so so I've dodged your question a little bit, not dodged it, but instead of, you said answers hiding in plain sight, I said whatever's in plain sight, instead of, not really dodged, but generalized, that whatever's in plain sight, whatever is obvious, hasn't been thought about. And one fertile way to discover things, investment opportunities or otherwise, is to meditate on, to muse on something that is obviously true, that everybody knows. For example, interest rates can't go below 0. Oh, wait a second, they can. Like, take something that's another flip side to that is to consider things that couldn't possibly happen. And the fact that they couldn't possibly happen means that no safeguards have been put in place to prevent those. So in fact, the odds are much higher that those are going to happen than that you think. And so,
Exactly.
So one of the things that I do is I take the conventional wisdom and then begin to actively explore the opposite side of it. So yeah, it's a good way to, I know I have an edge in that area because no one looks at what's obvious. They don't, or no one thinks about what's obvious.
A very good answer. We've discussed before, and you've noted that more information is not necessarily better in making decisions, including on investing. There have actually been studies in venture capital. Maybe they were, again, I'm a little bit skeptical about studies because depending who's funding it, you could have the answer you want to have. But it basically showed the more information that venture capitalists got about an entrepreneur, when it was overwhelming, the worst decisions that they made, and the funds didn't perform as well. But then we talk about the word that I don't think you like too much, and that is, I'm making a gut decision. But could I make the argument that a gut decision is not randomly throwing darts? I have the competence and I have the experience, and I recognize patterns, and I'm making a decision based on the fact of what has worked for me in the past, where I don't need to study it for 90 days and look at every little bit of information.
So, again, multi-part.
While you're answering, I'm going to get my hat. So please.
Okay, you go do that, and I'll save my guffaw for when you return. So gut decisions, even though you're off screen, I'm going to address the audience. Gut decisions, the thing is, everybody makes a gut decision. And that's what human beings do. Which is to say that the operating system, our human operating system that was in place before the Greeks developed logic and before we became rational and conscious, and is always operating. And so all decisions, oh my gosh.
I am back, and it is a 10-gallon.
I'm just gonna give you my guffaw. Okay, so I'm not gonna say all, most human decisions are gut decisions. So people say, oh, I go on my gut. So does everyone else. What do you mean? And then we layer in the our logic and the reasons that we're deciding something that was decided in a millisecond. And so one of the seminal studies, in fact, the seminal study on this was by psychologist Paul Slovic, the horse handicapper study, and people, it's worth looking up. Paul Slovic, horse handicapper study. If you look that up, 1974, and it's been replicated in other fields. And it's this, that we make our decision about anything, investment or otherwise, on the basis of a few pieces of information. And yes, sophisticated investors, by the way, have a more sophisticated, they've trained that gut, their intuition, and to rely on it. But in other words, human beings make their decision on the basis of the first few pieces of information they've got. And the more pieces of information you give them, all they're doing is confirming what it is. They're confirmation bias. They're actively, sifting through the information, go, see, I knew I was right. They've got 10 pieces of information, but one of them confirms what they already thought. Yeah, see, I knew I was right. And so what goes up is not their accuracy, but their confidence. So they become more confident, but they're not more accurate, which means they place bigger bets, right? When your confidence exceeds your accuracy, that miscalibration is going to result in losses. If I've got a hunch on a sure thing in the fourth race at Belmont or whatever, and I put my life savings down on that, that's not a good bet, right? And even if I placed an outsized bet, because this is a sure thing, can't believe the odds, and that kind of, I might be right on any given bet, but a process, we talked before, I used the word, to be a good investor, you need to have an edge, to know and have good reasons for that edge, stay within the edge, have a system. Another word is to have a process that you're using. And so the more information you get is just making you more sure of what you decided, yesterday or the day before on the, your first gut reaction on something. And by the way, think about it. The longer you think about something, the more likely your opinion is going to change. Suppose you and I were allowed into the Metropolitan Museum. We might not get in with our hats, but
especially you, Adam.
And we were to look at a particular painting, and I were to ask you, Angela, what do you think of that painting? And you look at it and you go, oh, it's a great painting. I like that painting a lot. I said, okay, now I want you to study it. This is sort of anti-confirmation bias. What happens the longer we look at things, we begin to find flaws. You go, well, I like it, but the brushwork, I don't know, and the theme is kind of conventional, and you begin to argue against yourself, right? Like, oh, in fact, that painting sucks. And now we go to another gallery and I say, take a look at that painting. What do you think of that? And you go, oh, that painting's awful. I would never buy that painting. And I go, yeah, but study it. And you go, oh, well, it's not my kind of style, but I do kind of like the use of colors. I see where the painter was going with that. And after a while, you begin to go, oh, in fact, it's a great painting. And so you want to learn to think about something long enough, but not overthink it. And there are no hard and fast rules for that. It would depend on you, the individual, what you were thinking about. I will say this, that big decisions, you ought to be able to make decisions pretty quickly. Very quickly. And Munger once said, Warren and I have never used a spreadsheet. Probably a little bit of fib. But his point was, if we have to use a spreadsheet to decide on an investment decision, then it's not a compelling investment decision. Why would we Like, what? It should be a screaming yes. If it's not, we'll wait till we find a screaming yes, right? The fat pitches, right? And so those who have done well in life have learned to rely on that intuition, but it's a trained intuition. Gladwell wrote about it in his book, Blink, but it's a trained intuition. And the irony is, because the title is a bit of a fraud because it doesn't teach you how to do that. The only way to acquire a split-second intuition, a gut on things, is to spend decades in a domain. Then you can do things really quickly. You put aside all the noise of logic and reasons. And so yes, gut decisions are really important. But it's not just, oh, I got a feeling. Like, that's not too reliable. If it were, I'd say, okay, in the past, when you've had that exact same feeling, how many times have you acted on it and not, and what have been the results, right? I mean,
right.
Even on gut decisions, you can begin to get, impose some metrics, have a process. Are my gut decisions, do they tend to be reliable? And what situations are they or not?
And I know we've covered this in the past. If you feel, Angelo, just refer them to prior podcasts, or maybe they changed or you don't want to talk about them. When it came to, for most people, in terms of looking at certain market variables in terms of making an investment decision, again, you mentioned to keep it relatively straightforward. I believed you mentioned 3. I did happen to print out a little mini part of the transcript of what we last spoke about this about a year and a half, 2 years ago. Did you want to review what your top 3 were, or prefer to move on?
Well, no, I can. Well, I call them correlates for the broad market, say the stock market, right?
Right.
And so as a general principle, when stock traders and bond traders disagree about a company or about the economy or anything, the bond traders are right and early, like 95% of the time. So a great leading indicator for the broad market is, and which I state only is for educational purposes, not not investment advice, is the relative performance of investment grade bonds to U.S. Treasuries. So the ETFs for those are LQD and IEF. So
yes.
You create a ratio of those. So that's one. Discretionary stocks versus consumer staple stocks is, maybe did I mention that one?
That was one of the 3, correct?
Yeah. Well, these are my 3 best around the stock market, right? There's some others that I'm not going to mention that are as good or better. But another one is, well, what was the third one?
Copper divided by gold.
Oh, I was going to say copper. Yeah. So the relative performance of copper and gold, that is more a predictor of 10-year yields.
Correct.
Than the economy, but it's still a good broad global. So when the price of copper is increasing faster than gold or declining less than gold, that's positive for the economy, for the market. Predicts that interest rates are going to go higher. And so those 3, I have lots of others, but those are like 3 that I've shared publicly, so I don't mind sharing them again.
Of course, and thank you. For investors, I could make the argument, probably wrong, but I could make the argument because it's fun. The most relevant questions to look at moving forward, I'm going to rattle off all 3 just to
wait. Could you rattle off one at a time? My little Cocoa Puff brain here.
Sure, why not? What will the new world order look like, Adam?
I always love your question. I have no idea. I just don't know. And I'll tell you what. Every U.S. election comes as a surprise, right? Like, doesn't matter who it is. You go, how the heck where did Jimmy Carter come from? Where did Reagan come from? and think
And Trump, yeah,
and
exactly.
Trump, and who knows what's going to happen next, and world order. I can't even think about what is going to happen, next year. And so these kinds of predictions are always fraught with derision afterwards. You go, look at all those predictions, and so it was Yogi Berra, right? Predictions are
Everything goes back to Yogi.
yeah. Predictions are hard, especially about the future, and so I do know this for sure. It's not what those parties looking to create a new kind of world order. It's not going to be what they're envisioning. It's not. Just if we look at the expanse of human history, it's that those kinds of things, especially right now, very difficult to foretell. Very, very difficult to foretell.
Would you put odds in this country in relatively a short amount of time, 1 to 2 more election cycles, that we'll have what some may define as a civil war?
Well, there's already a civil war. It just hasn't broken out, with guns stuff. But there's already a civil war. I mean, we've talked about this going back a number of years. So already a civil war going on. And so, war can be, was it, doggone it, I'm forgetting who defined, is it Clausewitz, the military philosopher, someone who defined war as politics pursued by other means, right? And so war can be fought on many fronts, and there's already a civil war going on. There's no sense, I invite the listener, and is like, on what elements are U.S. citizens united on? It's not, I have no idea really right now. I have no idea what they're united on. I know everything that they're not united on, and we got to begin to come together. And that's true not just within the U.S. It's a global phenomenon. And but because the U.S. invited and has always celebrated differences, that's the point. United States only makes sense is if they're united different states, right? There has to be differences, otherwise it doesn't make any sense to say they're united bunny rabbits. They're all the same, right? And so, so it's in that diversity but still a diversity held together by some core principles, right? And so
that to some degree appear to be eroding, but okay.
Well, yeah, it's I'm not sure, I'm not sure how many people actually believe those things anymore. So anyway, yeah. That's
so related to that first in a 3-part was, what will the new world order look like? Of course, there is no answer. It's just meant to spark discussion, because there could be many different variables, each with a different likelihood or percentage, which probably means the opposite will happen, of course. Kind of the part 2 of that was, how will the transition unfold? And if we don't have a great answer for the first one, there's obviously none specifically for...
No, I can answer the second pretty easily.
Okay, go for it.
So whenever you're going to change things, you have to prepare the people for that. So before a country goes to war, it will have the leadership knowing that they're going to go to war, which is to say, knowing that they're going to get their citizens to go to war, has to begin to prepare the populace for a war. And so they will begin to demonize the other country in certain ways. In other words, before large-scale institutional changes happen, you got to get the people on board, right? And it's not like overnight they just implement something, right? And so, you could, I've stated, and that the lockdowns of the pandemic were a great social experiment. And
Yes,
and the powers that be were able to observe just how far they were able to get people to do things.
pretty damn far.
Pretty damn far. And yet they were also, and they pushed too far, right? Do you know when the lockdowns got rolled back immediately?
No.
When the Canadian truckers, remember that convoy?
Oh, I remember it well. Probably March of 2021. Give or take a little bit.
The Canadian government, geez, they're saying, if we think you're going to send them money, if you haven't even sent them money, if we think you're going to send them money, we're gonna lock down your bank account.
Scary as hell.
It's really scary. But they pushed too far. That didn't stop anybody. And I think everyone in countries around the world realized, we went too far. Canadians are like nice Americans without the karma. If they're revolting, we've gone too far. And it was really within weeks of that, all lockdowns were ended.
That is true, but I can make the argument that they got further along than they thought. Let things settle in a little bit and let's see what happens next. And then we'll push that boundary further.
Here's the thing. Here's the problem with that.
I hope there is a problem.
Yeah, but here's the problem with that reasoning is that they weren't the only ones to view the experiment. So were the citizens. And a lockdown was imposed on people, and then one day just lifted. Oh, go about your business now. And so when the next lockdown is proposed, people are going to go, hold on a second. We remember the last one. And so, it's a one-time really mega global crying wolf, right? And okay, good luck on the next one. I don't think people you're going to be able to go, they're going to follow that script. Because people went, wait a second. You mean it's okay to walk around without masks now? And even the unvaccinated, we shouldn't be, attacking them anymore. And like, wait, what? And so they're not, you can't run that playbook anymore.
I probably should just keep quiet, but did you find it a little ironic that of all countries, and I love this country for a specific reason that I'll keep quiet. Of all countries, the one that kind of bucked it all along, and was it a little bit of a plan, was Sweden.
Well, the Swedes, yeah, it is kind of funny. They're, first it's a homogenous country, and they yeah, they did buck it all along, and I'm not quite sure why. And it didn't, I'm sure I could investigate and find out why, but yes, they did, and for their own reasons. And I think because they're very freedom loving, in the same way freedom loving let that person who wants to burn the Quran, like, it's a double-edged sword, right? I mean, right. At a certain point you have to go, you know what? We know this is going to emotionally, devastate a lot of people. So, and they might, they might be angry and act on that anger. So let's not do that. And, or let's express it in other ways. So, yeah, I think a lot of things in the are justified. Oh, it's just art, or free speech should be, I know there are exceptions to free speech, right? The famous, you can't cry fire in a crowded movie theater. Well, I would put the burning the Quran goes right along the same way. You shouldn't, maybe you shouldn't do that. So yeah.
I believe I have three more questions left.
Three? What the heck?
I only three. I know. I'll probably make
I thought this was
if
just
you really want.
thing.
The part three of that series, by the way, was and where will the best opportunities arise in a changing world order? I might be hinting at other currencies other than the dollar. Should families hedge their risk? The Norwegian krona, the Singapore dollar, the Swiss franc, owning more global interest in farmland, real estate, gold, and art would be a couple of examples that come to my mind.
So, the thing to do without giving specific advice is to look at previous panics and see what people tend to do, right? And in times of change and uncertainty. So the global safe haven currencies are in Europe, the Swiss franc, right? So you want to track the euro franc, the Swiss franc. In Asia, the yen, not the Singapore dollar, the yen tends to be the safe haven currency. For all the countries, the US dollar, gold also currency. Like people don't think of it as currency, but it's currency. But it would really change. It's like the question is too broad, and there'd be some kind of sequential thing to it, some kind of sequential aspect to it. And what I meant by the before the global citizens are gonna willingly just accept a new world order, you have to start to prep them, right? Do you know the cats on the roof joke?
No.
Okay. So it's worth my telling for those who don't know it. It's a famous joke, and it's a good shorthand to use. So this guy's a workaholic. His name's Angelo. He's just working really hard all the time. And his best friend, I'm not going to use you anymore. So this guy's a workaholic. His name is John, and his best friend says, John, you got to take a vacation. Like, I've known you since college. You've never taken a vacation. You must have like 6 months of paid vacation time. And John says, I can't. I love my job. I love my work. Who's going to take care of things if I go away? Who's going to, water my plants, take care of my cat, my mother? Who's going to take care of all those things? And Bob says, I'm going to take care of that for you. Please, I insist. As your best friend, you got to take a vacation. So with great reluctance, John packs his bags and heads off on a multi-nation tour of Europe. And he arrives in Paris, and he's having the time of his life. And he calls up his friend, Bob, after a few days. He goes, Bob, this is great. I can't believe you're so right. I should have taken a vacation years ago. Thank you so much. He goes, how are things? How's mom? How's my cat? And Bob says, your cat's dead. Long silence. And he goes, John, you there? You there? He goes, yeah, I'm here, but I can't believe you told me my cat's dead. You know what that cat meant to me. And Bob says, yeah, I knew. That's why I thought it'd just come out, rip the Band-Aid off. And said, no, you shouldn't have told me that. You should have said, the cat's on the roof. And I would have been nervous. And I would have called the next day and said, how's my cat? Oh, she's climbing up towards the chimney. We're having trouble. And I would have called back the next day. Oh, she's gone down the chimney. And by degrees, I would have come to accept the possibility I might not ever see my cat again. Anyway, he's so upset. He's really bereft. He flies back. He buries his cat, but he's so heartbroken. What the heck? He decides to go back to Europe. Maybe forget it. He goes to Barcelona. He goes to Prague. He goes to Budapest, and he's beginning to feel himself again. Calls best friend. Hey, John, how are things? How's mom? She's on the roof. Angelo, you still there?
I'm here. I'm seeing.
That's a punchline. She's on the roof. And yes. So those who know the joke can use that as a shorthand, like Putin's on the roof or whatever it is. And so we're gonna have to prep for this coming news. And they'll be not going to happen overnight. They'll have to get us ready for it. And it's likely to be implemented in certain places earlier than others, as test cases and such.
Perhaps the last question, although maybe an audience member will pop something in the chat. Of course, given a big macro issue, and we did discuss this back when you were on 15 months ago, it was one of the core themes that we spoke about, but it's now 15 months later, and that would be Russia and Ukraine. And obviously, in about the last week, new developments for obvious things. And again, I hate to always be the person who looks for somewhat of a conspiracy or a deeper meaning behind it, but what happened with Putin, Wagner, your opinion, and I realize it's an opinion.
So someone really should, you should point when you post this podcast, you should point to our last podcast, because I talked about it in detail. I said, what did Putin know on February 24th when he said, right, let me see, I could make love to my mistress, I can open a new pipeline, I could go make a speech in, Red Square, I could do any number of things, but no, today, I should invade Ukraine.
What does he know that we don't know?
Exactly right. That's the way I posed it. And so what did the Wagner guy know? I can't even pronounce his name, right? What did he know? And what did Putin know? By the way, it's not even clear to me that it was a rebellion. If Putin wanted to smoke out whether there was an insurrection within the Kremlin, this would be a good way to do it. Right? Let's let there be a rebellion and see who decides to start, siding with it, So there's so many pieces on the chessboard that we don't know about. And the one thing I do know is that whatever I read about in the newspaper may be factually true insofar as they report a fact. But to the degree they do any kind of analysis, they're clueless. They're clueless. I do know that it's not what it seems. That's all I know. I don't think it was, in other words, the mercenaries going up against Putin. Oh no, it's not that simple. That's what I know. And so what is actually afoot, I have no idea. And it would not at all surprise me if it was a distraction, an engineered distraction. And I do know this, in the same way that a magician goes, observe, and extends his right hand. You can't see my right hand, but observe. That my attention should be anywhere other than the right hand, right? Meanwhile, while everyone's looking at his right hand, his left hand is doing something. And so whenever our attention in public affairs is riveted on something, there's a reason it's being riveted there and not somewhere, so that something else is going on. That's all I know about that.
Yeah. Yes, something else is definitely going on. We could continue and do a deeper dive into the war and the impact from a global perspective. I think that may require a podcast, a little bit like it was 15 months ago, dedicated to itself. Adam, we have covered a lot of ground here. It's over 2 hours, which maybe by our standards is a short podcast.
We've laughed, we've cried, we've explored the full range of human emotion.
And that's oh, there may be maybe one question coming in. And again, we may not really have the time to read. I'll give it a very quick view. Okay, this is a good one to end on a little bit of a comical note.
Good.
The potential fight, UFC, boxing, I'm not sure what it's going to be, between Zuck, of course, and Elon. A little bit of a serious twist to it. Is this a misdirect to
so
get
I don't
us
think it's a misdirect. I don't think it's
okay.
a misdirect. And it's for me disturbing on a number of levels. It's not funny. These are CEOs of major companies, and Zuckerberg has gotten all buff. And by the way, he looks kind of ferocious. I know.
He would be my early favorite for now.
If you look at his face, there's a kind of feral, I would not want to mess with him. And really there's a kind of, he's, I'm not sure he's ready for mixed martial arts yet, but I would not mess with that guy in the ring. And Elon Musk, okay, like what's he done? And so, and there's the age difference and all kinds of things. And so, but they've got more serious things to do, especially Musk, right? He's got Twitter. He's got
like 5 different billion-dollar companies or whatever.
Well, right.
Trillion, I'm sorry.
$1 trillion, right?
Yeah, sorry.
Tesla, Twitter, SpaceX. I have no idea about the Boring Company, and now XAI. He's about to launch an AI company.
Right.
You know, and really, he needs to take a sabbatical. He needs to take a public sabbatical. Go, guys, I got a lot of companies to run. I want to get back to business, and you know, he should have a pinch. You know, in baseball, they have a pinch hitter. He should have a pinch rep. They should both send in surrogates into the ring, and so yeah, I'm sure pay-per-view would be huge, but it's really serious, and I'd be really afraid. I think Musk would get mauled, actually. I think he'd be really seriously hurt. That's my
Okay.
you know, when I look at his face, and I look at and you look at Zuckerberg's face, and it's clear he's training for this. I would not. It's a bit like Rocky, you know. He's got that same kind of hardened, you know, when Apollo Creed did not take, you know,
yeah, Musk is probably not quite as built as Apollo Creed's character.
There you go.
Although I don't know, you give Elon 6 months, like maybe he transforms. But on a little bit of a serious note, let's even assume that is the case, and he becomes this buff monster. He probably took his eye off the ball of all these companies that he's struggling. That's what I mean.
They got better things to do. They have better things to do. And if it were done totally playfully, and they're sort of making light of it, but I think it's really serious. I don't think
it seems kind of serious. I laughed at it when I first heard it, and it's picked up steam. Unless, like the chat mentioned, a misdirect. But why?
Well, I don't think it's a misdirect. I think Musk is famous at needling people and institutions and things and the world, and likes to be the provocateur. And I think he poked fun at Mark maybe once too much, and maybe that hit home. I'll show you. And a lot of these guys, look at Bezos, they're all getting real buff, you know. Look how strong I am. And so yeah, I have no doubt that Musk could train and go head to head with him, but why would you want to? And why would you want to run that risk? You got companies to run. You're a fiduciary, you know, and you're trying to change the world. Let us hope.
You know, by the way, when you fight, assuming this is legit and it's not just jujitsu, but literally mixed martial arts, like, hello, not only could you get hurt, you could get permanently and brain issues.
That's what I mean.
No, but it's not impossible.
No, that's exactly what I mean. Yeah, it's by the way, I don't even think Lloyd's of London, who's going to insure Musk?
Yeah, there's not enough money to go around. If this is even a little bit legit, this does go to show a little bit about a bit of a primal nature that specifically that men do have, including men that are amazingly successful, but maybe felt, I don't know, like there's a manliness or something to I'm lifting weights, I'm exercising, and I'm fighting, and it's something that I want to prove. That may literally be, and this is kind of what testosterone does. I wonder if that actually plays into it.
I mean, I think of course it does. You know, it's who's the alpha dog or the alpha ape? You know, and
yes,
it is primal, and who's got the biggest company, and you know, and all that kind of stuff. And so, yeah, I'm sure that plays out. But at the end of the day, they're CEOs. And the one thing, if they're both chairman, you know what? I'm gonna hand over the reins of my company to this person, and I'm gonna take up mixed martial arts.
you could argue a fiduciary responsibility to the board and shareholders.
Yeah. I would, if I were on the board of any one of those companies, of either of them, I'd say, you know what? No, we're vetoing that. We're not letting you do it.
If something were to go wrong, I would say the board could potentially get sued.
Yeah.
So
yeah.
you can make the point that they, I don't know, maybe some of them step down. This will be a little bit interesting how it evolves.
Yeah. Yeah. So I don't think it's a misdirection because it's just the two of them. But whatever it is, they're not doing what they've been entrusted to do by their investors, right? Which is
Right.
grow their businesses.
Well, now I probably know what kind of clickbaity title that I may use and what clip I may use, Adam. It's about the views, so they could hopefully they get to the end, but they hear all the amazing intellectual content before I wouldn't say joked around a little bit, because the conversation got a little serious relative to Musk and Zuckerberg. So who knows? But yeah, this will make it as a clip, especially with the cowboy hat and your wonderful hat as well.
Top hat.
A top hat, yes. On that note, it's time to bid a fondue. It's been a notch over 2 hours. I hope our live audience enjoyed it, and those that will watch it, hopefully in its entirety, watch it or at least listen to it in the car. How about that? Nothing like a drive in LA to kill 2 hours. I got it covered. Don't worry. I'm not the only one. Joe Rogan's not the only one who does long form podcast, or your friend, by the way, Tim Ferriss. So I kind of enjoy them as well. On that note, though, it is time to say goodbye. Like Adam did say several times, I'll repeat, this is for entertainment. I mean, come on, I'm wearing a cowboy hat. This is for entertainment. And I'm even laughing to say educational purposes. It's strictly your situation, whatever it comes to making decisions on life and investing, is strictly decisions that you'll have to make. This is done at a certain time. Things could change in the world a day from now, a week from now, a year from now. Your situation could be totally and is totally different than anyone else. And anything where it comes to investing, hello, you could do what? Not only in theory could you lose money, you could lose everything. So you're going to have to make your own decisions in terms of what you do. But of course, we do hope you did enjoy the entertainment purposes of it. Adam, for those that would like to follow you on your primary social medias, or if you have any upcoming books, how could they do that and learn more?
Well, Twitter, I am Adam Robinson. So go there. That's I tend to post things there. I have an Instagram account, but I'm not really a photo person. So Twitter is probably the best thing. Yeah.
Okay. And any upcoming book?
Well, I've got. I was on Shane Parrish a couple weeks ago, and I said I would release my book, How Not to Be Stupid, which Buffett endorsed. I've been sitting on it for 5 years.
I know, for a long time.
You've known about it too. I have to add a preface to it, so I have to add a couple quick chapters. But anyway, that's going to be released. I got a few books that are pretty much done, and I just got to get out into the world. I've been busy with markets.
Yes, there's been a lot going on. So everyone, again, I'd like to thank our live audience, those that watch or view in, of course, our special guest today, Adam Robinson. We all hope you enjoyed it. I'm Angelo Robles. I'm the founder of Family Office TV, and I still have multiple platforms on YouTube. So Family Office TV is a new one that's going to be more broadly on family office topics. And my @Family Office, so some irony there, is probably the one that's more focused on economics, macro, and investing. Although, of course, this interview with Adam, which is pretty rare, will actually make it up on both of those quote unquote platforms. I'm the founder of SFO Continuity, and we'll be rolling that out sometime this summer for those that have an interest in learning more broadly about how to create and run a family office, family continuity, SFO continuity, and everything related to that. I'd like to hope that we're going to be the definitive resource globally. So stay tuned. That probably is a couple of more weeks to go, or depending on when you watch or view this, probably sometime late July into early August. And any of you could follow me on social media. On LinkedIn and YouTube are probably my most active platforms. You could find me, and you could always reach out My personal website is angelorobles.com and email angelo@angelorobles.com. I appreciate all of you. Thank you so much. And Adam, have a wonderful night. Thank you for all your time.
Thank you so much. Bye.
Thank you. Bye.